when will be the right time for you to invest in secondary? Not very many of our respondents thought now, i.e. the first half of this year, was the right time, it appears, to invest in secondary, but just over a quarter, 25%, thought in the second half of 2011. But interestingly, more, over 30% thought next year, and indeed over 30% thought later, i.e. beyond the end of 2012.
I think it does depend on the market, and clearly we do have some secondary property for sale at the moment. And in those stronger markets, particularly I'm seeing in Germany, but also in Poland, I believe that there is actually increased interest in secondary, good quality secondary, and also for the type of building where you can genuinely influence the performance of it. So we're involved in some German real estate at the moment where you've got secondary property, but where there are genuine opportunities to invest into the building, to increase value, to work with tenants, that replace tenants and improve the situation. That type of secondary property, I believe, actually the units are coming in for right now. But it's very different from the sort of building which is perhaps single let, where your ability to influence is not at a tenant level, and people aren't buying into that type of secondary property where in order to get yield shift with the market. So I think it does depend on the property and it does depend on the market, but I am seeing for the right buildings in the stronger markets actually people taking a view that secondary property is the place to start investing.
I think another point to bear in mind, I think the back-ended delay in people coming into the secondary market is very much going to be influenced by the debt market. The debt market out there, and generally people buying secondary do need to secure debt. The banks are not really in the market to lend on that quality of stock yet. Until we start seeing perhaps a re-emergence of a securitization market with the impact of Basel II coming through, and the issues of holding this stuff on balance sheet is actually deterring the market, and they're really looking for, the banks are only really lending on the very best type of property. So until we start seeing a bit more liquidity in the banking market, it's very difficult to see how we can see the secondary market sort of coming back in. And I would imagine there's a lot of the delay is people saying, well, actually to try and go and acquire today will require too much equity, and therefore we're going to delay our entrance into the secondary market.